Welcome to the Monkey's Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding nice stocks just for you. So all you have to do is just watching this entire video and decided if the presented stocks could be something for your portfolio. It doesn't get much easier than that. In return to all my preliminary research and hard work, I would really appreciate it if you would drop the subscribe button to become part of the Monkey's Stock Club family, so you will never miss a video again. Also drop the like button if you enjoyed the video, so that helps the YouTube algorithm to push my video. Please be aware that everything I say here is just my opinion and no investment recommendation. As you can see, I'm just a monkey and not an investment banker. Nevertheless, I have pretty nice analysis tools to value stocks and I want to share all the exciting stuff with you. And honestly, how do you feel when you are told, just look into Yahoo Finance and build your KPIs to evaluate a company? I think most people are scared off, and most of all it is a hard work to collect all the data. But don't worry, I'm there to do the groundwork and show you only the interesting results, so you can do the cool stuff. Please stick around for the entire video, so you don't miss any great chances to make big money. So, don't waste time, and let's get started with some numbers. So today we're gonna talk about Tesla and NIO, and the end of this video we will awarded one company as the winner. One of Tesla's longtime bulls says it's time to take profits. And a lot of people asking themselves, did NIO hit $100 by 2021? More to that later in this video, after showing you the analysis for both companies. We will do a comparison between both companies. In the first step we will use the high growth investing strategy. It is a long-term oriented strategy for stock picking of growth companies. The high growth investing strategy uses 6 key figures, which are suitable for filtering out the outstanding companies from an investment universe of fast-growing companies, even if they are not yet profitable. In a second step we will use the quantitative analysis strategy. The investment strategy evaluates a share on the basis of 6 criteria that can lead to above-average performance. And last but not least we will do some scenarios for estimating the fair price by Peter Lynch. So we start with the high growth investing strategy. First, an HGI score is calculated for each share according to a simple points system. The HGI score consists of 6 criteria for which 0 to 3 points are awarded. In total, a share can therefore receive a maximum of 18 points. On the IMAX screen you see both companies, with the 6 KPIs running from left to right. And we start right away with the first KPI. Enterprise value divided by sales actual. Enterprise value is a measure of the value of a company regardless of its financing. If you divide the enterprise value by sales, you get an important ratio for estimating the valuation of fast-growing but still loss-making technology companies. 3 points are given for values less than or equal to 8. 2 points for values greater than 8 and less than or equal to 10. And 1 point for values greater than 10 and less than or equal to 12. In the upper right corner you can see a diagram where you can compare the current score of both companies. Tesla has an enterprise value divided by sales of 20.2. And NIO has a value of 7.5, Tesla gets no point, NIO gets 3 points. The next KPI is the gross margin trailing 12 months. It results from the sales minus the direct costs divided by sales. The gross margin provides a good indication of the profitability of a business model. The higher the percentage, the more money a company has available for sales, marketing, research and development and capital. 3 points are awarded for values greater or equal to 75%. 2 points for values less than 75% and greater or equal to 65%, and 1 point for values less than 65% and greater than or equal to 50%. Tesla has a gross margin of 21%, and NIO has reached minus 15%. Tesla and NIO get 0 points, because the value is below 50%. At the top of the tracking diagram Tesla has now 0 and 3 Nicaragua and Cordoba's points, as the sum of the first 2 KPIs. The next KPI is the Rule of 40 score trailing 12 months. The sum of sales growth and free cash flow margin is calculated. The Rule of 40 is a simple key figure for assessing the efficiency of a company's growth and thus the quality of its business model. The higher the value, the better the business model of the company. Values above 40 are considered attractive. 3 points are awarded for values greater than or equal to 50%, 2 points for values less than 50% and greater or equal to 45%. And 1 point for values less than 45% and greater than or equal to 40%. Tesla has a Rule of 40 score of 22%, and NIO has also 5%. Both companies get 0 points as the value is below 40%. The next KPI is the sales growth trailing 12 months. 3 points are awarded for values greater than or equal to 40%, 2 points for values less than 40% and greater or equal 30%, and 1 point for values less than 30% and greater than or equal to 20%. Below on the IMAX screen you can see the sales growth of both companies over the last 3 years. Tesla has a sales growth trailing 12 months of 15%. 0 points for this. NIO has a sales growth trailing 12 months of 138%. For this NIO gets 3 points. The next KPI is the debt ratio. The debt ratio results from the debt last quarter divided by equity last quarter. A debt ratio less than 1 indicates low debt, while a debt ratio greater than 2 indicates possible risks from debt. There are 3 points for values less than or equal to 0.5, 2 points for values greater than 0.5 and less than or equal to 1, and 1 point for values greater than 1 and less than or equal to 1.5. Tesla has a debt ratio of 0.87, therefore 2 points. NIO has a debt ratio of 0.01, for this NIO gets 3 points. The next KPI is the PEG trailing 12 months. It is calculated by dividing the price per earnings ratio by the profit growth trailing 12 months. The PEG is one of the most important key figures for the assessment of already profitable growth stocks. If this ratio is between 0 and 1, this indicates an undervaluation. The PEG can only be calculated for companies that are already sustainably profitable. There are 3 points for values less than 1 and greater than 0. 2 points for values greater than or equal to 1 and less than 2. And 1 point for values greater than or equal to 2 and less than 4. The PEG of Tesla is 1.12. Therefore 2 points. The PEG of NIO is not available, as the EPS is still negative. For this NIO gets 0 points. In terms of the high-growth stock analysis, NIO is the clear winner with 9 points in total. Let's start with the quantitative analysis strategy. The investment strategy evaluates a share on the basis of 6 criteria that can lead to above-average performance. For each criterion one of the following values is assigned, +1 point, 0 points, or -1 point. The return on equity last year reflects the relationship between profit and equity, indicates how the equity of a company has earned interest during a financial period. A shareholder can see from the return on equity how profitable his investment in the company is. A+ point is given for values greater than 20%, a minus point for values less than 10%, and 0 points for values between 10 and 20%. On the top right you can see a diagram where you can always compare the current score of both companies. The PEG of Tesla is 1.12. Therefore 2 points. The PEG of NIO is not available, as the EPS is still negative. For this NIO gets 0 points. In terms of the high-growth stock analysis, NIO is the clear winner with 9 points in total. Next one is the EBIT margins. It is the ratio of EBIT to sales. High EBIT margins are a quality criterion for the investment risk. The higher the EBIT margin, the easier it is to manage declining sales. A+ point is given for values greater than 12%, a minus point for values less than 6%, and 0 points for values between 6 and 12%. Tesla has an EBIT margin of 0.3 and NIO of -139%, therefore Tesla and NIO get 1 minus point. Next KPI is the equity ratio. It is the ratio of equity to total capital. The equity ratio provides information about the credit rating of a company. Plus point is given for values greater than 25%, a minus point for values less than 15%, and 0 points for values between 15 and 25%. Tesla has an equity ratio of 24 and NIO of 16%, therefore Tesla gets 0 points and NIO gets 1 minus point. It continues with the price per earnings ratio of the last 5 years. Indicates after how many years you have doubled your stake, assuming that the profit remains constant. It is therefore a good indicator of whether a share is expensive or cheap. Plus point is given for values between 0 and 12, a minus point for values greater than 16 or less than 0 or not available, and 0 points for values between 12 and 16. Tesla has a PE ratio of 5 years of 1984 and NIO is not available as this is a negatives value, therefore Tesla and NIO get 1 minus point. It continues with the current price per earnings ratio. The important factor here is the price per earnings estimated by analysts for the current fiscal year. A+ point is given for values between 0 and 12, a minus point for values greater than 16 or less than 0, and 0 points for values between 12 and 16. Tesla has a current PE ratio of 260 and NIO not available. Tesla and NIO get 1 minus point. The next KPI is the profit growth of the current fiscal year compared to the next fiscal year. The estimated earnings per share for the next fiscal year are compared with the estimated earnings per share for the current fiscal year. A+ point is given for values greater than 5%, a minus point for values less than -5%, and 0 points if otherwise. The expected profit growth for Tesla is currently 60%. NIO performed also good with a profit growth of 50%. Both companies get 1 point. In total Tesla gets -3 and NIO -4 points out of 6 possible points. So within the quantitative analysis Tesla makes the race, nevertheless a bad result. And last but not least we will calculate the fair value, by the Peter Lynch formula. Above you can see an overview of the two results of the applied analyses. On the IMAX screen you see the following calculation. First you see the earnings per share of the last 3 years and on the right side the estimated earnings per share for the current and next year. If we compare EPS 22 with EPS 19 and divide it by 4 we get the average profit growth. The average profit growth for Tesla is 64%. If you multiply that 64% by the EPS next year of $3.69 we get a fair price of $236. Comparing this to the current price of $604, the gap is down -61%. So Tesla is currently overvalued by the Peter Lynch fair value formula. The average profit growth for NIO is 18%. If you multiply that 18% by the EPS next year of -31 we get a fair price of not available. We will do the following scenario. If we would assume that the EPS will be positive in 2021 at 0.31, we would end up at a fair price of round about $10. Comparing this to the current price of $44, the gap is down -77%. So NIO is currently overvalued by the Peter Lynch fair value formula. So in both cases the current price is a bet on the future. As I mentioned at the beginning of the video, one of Tesla's longtime bulls says it's time to take profits. Tesla lost a bull Wednesday evening. Longtime Tesla bull and New Street research analyst Pierre Ferragu downgraded Tesla stock to hold from buy. He thinks it's a good time to take some profits ahead of Tesla's inclusion into the S&P 500. Ferragu, however, still believes in long-term outlook and recommends investors buy Tesla stock on any weakness. The downgrade appears to be about valuation. Ferragu upgraded shares to buy on October 7 when Tesla stock was about $425. He also took his price target to $578 which, at the time, was the highest target price on the street. Since then, Tesla stock has gained 42%, far better than the 6% and 7% respective gains of the Dow Jones Industrial Average and S&P 500 over the same span. His price target is still $578 even though he sees shares hitting $1,200 in 2025. We expect Tesla to trade at 75 times forward earnings in 2025, writes Ferragu. He discounts that at 20% to arrive at his $578 number. Tesla is the most valuable company ever added to the S&P 500 and shares are up almost 800% over the past year. That makes comparing Tesla to other situations difficult. Coming to the NIO stock forecast. In the short term, Shanghai-based EV maker NIO will continue to attract investors' attention as it posts significant earnings growth. NIO operates in the Chinese premium electric vehicle market. The company designs, manufactures, and sells smart and connected premium electric vehicles, and is driving innovation in connectivity, autonomous driving, and next-generation artificial intelligence. Should investors sell immediately? Or is it worth getting in on NIO after all? Rounding out its 2020 earnings, NIO announced third-quarter results on November 17 that came in above consensus thanks to strong shipments and margin improvement. Revenue rose 146.4% year-over-year and 21.7% sequentially to $666.6 million. This compares to last year's revenue of $262.47 million. The company also issued a strong outlook for the fourth quarter. NIO is trading at $46.56 at the time of publication, down from its 52-week low of $2.11. Overwhelmingly, 76.5% of traders and investors said NIO would indeed reach $100 per share by 2022. Our study found that investors said the EV sector will explode in 2021, NIO could become a leader in the sector. Among traders and investors who believe NIO stock will reach $100 next year, one respondent said, NIO has great technology with its extensive network of battery charging and power exchange facilities. There have been reports of new EV models being introduced. When they are sold to Europe and the US, they will cost over $200. After all the solid breakdown I would award NIO as the winner as I see a bigger potential to make big money. That was it from my side. I hope you enjoyed the video. If so, then drop the like button for the YouTube algorithm. Press the bell to get a notification when I release new content. And please drop the subscribe button and become part of the Monkey Stock Club family. So have a nice day and hopefully we will meet again. Bye bye.